think every other venture that is coming out of at least the Indian blockchain space is known to Mr. Ajit. We would like to extend a warm welcome to Mr. Ajeet Khurana. And thank you so much, sir, for sharing, for taking out time and giving us an opportunity to have a discussion with you and know more insights from you. Welcome to TDeFi BizThon.
Thank you very much. You can hear me well, right? I just put on my earphones. Excellent.
Yeah, perfect.
So should I begin, or how do you want to do this?
Yeah. So I'll just take a couple of minutes to elaborate on what is TDeFi BizThon to our audience, and then I would like to invite you for your introduction. And I mean, I would be more than honored to introduce, but I think I would not be able to do justice. And that's why I would like to invite you. And then we'll start with our topic for today. That is how to value an early stage startup, which is a question in the minds of all these upcoming entrepreneurs. They are running blockchain businesses. Even valuing an equity startup or on a non-blockchain startup is a difficult job when it comes to investments and venture capital. And when you introduce blockchain, that's another whole together different paradigm and different parameter that is introduced. So that's a very important question that is there, and we would like to know insights from you on that. So moving forward, TDeFi BizThon is an initiative by TDeFi Acceleration Program, in collaboration with Future Blockchain Summit, GITEX 2021. GITEX, for all who does not know, is one of the largest technology exhibitions that happens in Dubai every year from the last 26 years. It displays and exhibits the technologies that are being developed around the world. From the last few years, Future Blockchain Summit is an integral part of GITEX. And in this, we are hosting a hackathon. And this is not just a hackathon, it's a unique hackathon with an idea or the concept of walk in as an idea and walk out as a fully funded business. So essentially, we are encouraging participants, entrepreneurs, ideators, innovators to think about an idea, and then we'll help you with your mentor support. We'll help you with the mentor support. We'll connect you to the participants of the ecosystem and help you in launching your idea as a fully funded business and run its operations. You just need to have a very pure intent and a good idea, and then the journey would be just a cakewalk. I mean, obviously that's not as easy it sounds to be, but yeah, I'm just trying to encourage and motivate you that it's one of the opportunity where you just are not restricted to a piece of code. You are actually invited to build a product and launch it. With this, the prize money for the hackathon is $1 million, which is spread across 5 tracks. We have banking, we have CFI, DeFi, we have social networks and NFT, social impact and sustainability, we have gaming on blockchain, and we have 5th is blockchain everything. With this, we have a lot of mentors that have come forward to collaborate with us, and Mr. Ajit is one of them, who would like to help you and mentor you to build your idea into a business. Thank you so much for taking our time and joining the session today. You can drop your questions in the it's been streamed live, so you can drop in the comments or in this Zoom session as well. Now I would like to invite Mr. Ajeet Khurana to give a short introduction about himself. Thank you, sir.
So since it's my personal introduction, I'll try to keep it like really short because I want to begin the session and add value. Very simply, I've been entrepreneur twice. I started my first entrepreneurial journey in the year 1994. Have been an angel investor. First angel investment was in Jan 98. But for the next 13 years, it was like averaging like 1 investment a year. So not a very serious investor. But from 2010 to 14, I was a full-time angel investor, went to the other extreme. Subsequently, I joined IIT Bombay as a CEO of their business incubator called Sign. Then I joined a venture development fund from Hong Kong called II5. Subsequently, I joined Kalari Capital. Later, I tasted blood. They say that when the lion tastes blood, then it can never have anything else. So that is what happened. And I got introduced to cryptocurrency in September of 16. I purchased a fraction of a Bitcoin for 1,000 rupees and never looked back. In early 18, I joined ZepPay as its first outside CEO. Why I say outside CEO is because a CEO was the founder and the founders at that point of time helped take it globally. India faced a lot of turmoil at that point of time. I left ZepPay when the management completely changed in March of 20 And here I am now working with early stage startups and helping them grow. That is what it's all about. There are many parts, frankly. You can like look up LinkedIn or whatever if you want more details, but I'm dying to get into discussing valuations because that has been a very important point. So
Yes.
go ahead.
Yeah, sure. Uh, First of all, I think you were being very humble and modest in introduction. I mean, people, if you are listening to this, please don't just go by the words. Just go and check out his LinkedIn profile. You would see every startup that is coming out, a successful startup that is coming out, has his name and his advisory to it. So he's the man to look out for to make your startup successful. With this, I'll quickly jump to the topic for today, and everyone is waiting for that. Um, when we talk about early stage investments and early stage startups, one of the questions that comes to the mind of every entrepreneur, and I personally have been a part of journeys of a lot of them, so it's my first-hand experience as well. It's about valuation. How do I go and value my startup, and then what when I ask for money, what percentage of equity slash tokens should I allocate to that investor? Is the question that comes to every entrepreneur's mind and has been troubling them. It's always, what is it? Is Am I undervaluing it? Am I overvaluing it? I mean, what am I doing with it? So, how do you? What would be your suggestions to these confusions and questions?
So, when you talk about am I undervaluing it, am I overvaluing it, the answer to at least one of those two questions is yes. And the reason is that while there are textbooks written on valuation, there, like for example, one of the world's foremost authority on valuation is a professor called Damodaran who teaches at New York University. He has written a book called Damodaran on valuation. I have studied valuation as a student way back in the early 90s when probably a lot of your audience members were not even born. But it is not completely random. At the same time, it's not completely scientific. So it's art as well as science. So today, what I have come ready to do is to talk about basically two buckets. The first bucket will be about understanding what is going on about evaluation, as in why is it important, why is it difficult, why it could make or break the startup and those kind of things. And the second part, I will help more about arriving at a valuation, as in trying to compute it. Even at the end of it, your personal attitude towards valuation, your personal belief about where you want to go is going to be a very big driver. And no two people, even with nearly identical startups, will actually value themselves identically. And it shouldn't be identical. So, Rishabh, are you be doing this in more like a question answer format or lecture format or what format? Q&A
Uh,
format, or what is it like?
So for to begin, I mean, the beginning would be more of an your insights, and then we'll have questions from the audience that I'll pick it up and take it up. So
Perfect.
it's more about I mean, as you rightly said, that it's more about art and science. And Professor Aswad Damodaran has been a core has been propagating this thought in his books and his models, that even if we were whenever we were valuing a corporate or an established corporate, there are a lot of assumptions that we take, and those assumptions is not science, it's an art to assume the right, at least the closest or the most approximate number, and then use the value of science or the science to extend and forecast and then come up to a valuation. So
So
what for
other than the science and art, there is also other dimensions. See, science is where you try a formula. Art is where you try to make certain assumptions and say this is what seems right. But there is also aspirations. There is also comparisons. There is also benchmarks. There is also acceptability. There is also practicality. So it is art and science, but then all of those other things. Because what if I think I am worth $100 million, but nobody wants to give me that?
Hmm.
What if I think I'm worth $1 million and nobody wants to give me that, but they might be willing to give me two? So there is a little bit of a hocus pocus going on, and that's where experience comes in. So this is good, Rishabh. I think you're doing a good job of putting all of this together. I would like to share some of the experiences in that.
Yeah, please, that would be great. So would
Okay.
you yeah.
So here's some starting points, which will at least get people to start appreciating what we are doing. So I said in one of my part of my introductions that I became a full-time angel investor between 2010 and 14. And here is something crazy. So I was part of several angel investor groups and the like, and I found that most companies that would come to us, by most I mean two-thirds, would value themselves at around $1 million, which at that point of time was 5 crore rupees because the dollar was about 50 rupees, maybe 50, 55. I was like, how is it such a coincidence that two-thirds of the company come and ask for the same valuation? Because what goes into valuation fundamentally is who you are, that is the founders, what have you already done, and what do you plan to do? As in, these are the three components: who you are, what have you already done, and what are you going to do? Or you could view it completely differently and say, what is it that the investors will pay to acquire an ownership stake, whether through stock or token, and how much will they make? Just as an example, suppose there are two companies, both of whom seem similar in what they have presently achieved, and both of them have the same number of tokens. By the way, for this discussion, when I say tokens or equity, doesn't matter, as in the logic will remain the same. So both of them have the same number of shares or tokens, and one of them is selling at 10 times the price of the other. As an investor, which one should I buy? Now, I know that your initial temptation is to say, buy the one which is priced at 1/10. But what if I don't have enough confidence in it yielding a return? For example, for better or worse, I actually became a stock market investor in my early teens. And that happened not because I'm just so smart, but because my father had always had very poor eyesight. So I would have to help for him. And my elder brother and my younger brother were not really keen to do that. So I was the one on whom the onus came. That helped me a lot and actually has been instrumental in taking me where I am today. But all the same, one of the interesting things I found was that I was trying to find how shares are priced, which, if you think about it, is the valuation of the shares listed on the stock market. And I came across a company which I had not heard of till that point of time because I was in my early teens, called Procter and Gamble. Of course, a very famous company. But one interesting thing I found was that the company was loss making, right? So any valuation of a loss making company from a scientific basis, trying to do a price to earning ratio or a discounted future value, was all like leading to share prices which are negative. That means the price of the company should be a negative number, which means for you to buy the shares, they should also give you money. And I'm like, clearly, this is not a formula driven approach. So even as an early teenager, I had realized that there were dimensions to this which were more than what was happening. Now move 30 years later or 40 years, whatever is the computation, maybe 30, and go back to the time when I was an angel investor and find that everybody seems to be valuing themselves very similarly. In fact, if you look at token offerings also today, and I'm talking of token offerings which are not going for an IDO or a public issuance, but probably doing, let's say, a seed round, I find that most token offerings are in two buckets. One is valued at the $5-8 million valuation, and the second, which likes to evaluate itself as a $20-30 million valuation. So there are these two buckets depending on what the founder thinks they can pull off. That is the key. Shouldn't this be based on some real facts as opposed to what the founder thinks they can pull off? Uh, this is what I want to first begin with. Suppose at the end of this session, you come up with the belief that your startup should be fairly valued, all things considered, at $8 million. Okay, let us say that is where you reach. And simultaneously, you feel that you would probably be able to sell your tokens maybe at $12 million, which means though you believe, based on what I told you, that you're worth 8 million, you can pull off a 50% hike. And the reason for that is the market is very bullish. So people are willing to pay more than before. Go back 1.5 months, if you feel your valuation was 8 million, you'd probably be able to pull off like 4 million, right? So hence, is it just market conditions? What if you are able to pull off 12 million? Is there any reason to consider 8 million? Right? Because I can sell at 12 million. Like I have a car which I want to sell, actual fact. And I have a certain belief about what it should be. So it's a Honda Mobilio. I know what I purchased it for. I know how old it is. So based on what I read and look on websites, I feel it should be worth so much. Suppose I find a buyer willing to pay me a little more than that. Is there any possible reason I should say, no, pay me less? Now, the difference between selling the car is once I sell the car, my job is over. I have no relationship with the buyer. I have no obligation. As long as I have disclosed all the right things and given the right car, the problem is over. But with the investors, selling them the tokens or the equity is the starting point of the relationship. It is not the ending point, right? Unlike the example I gave you with the car. This is a very important factor. What do you want to do? For example, it's a very simple yes or no question. Is the end objective of your business venture, end objective, final, terminal value, is the end objective of your business to raise investors' money this time in the seed round? If your answer is yes, first of all, you're a scamster. Because fundraising cannot be the end objective of a business, right? So obviously your answer is not allowed to be a yes. If it is yes, please disconnect. The moment your answer is not yes, that means you have to raise further rounds, you have to raise a private round, you have to do a public round, you might want to do treasury diversification later, you might want to do a whole lot of things later. So much so you as individual might want to raise probably a completely different venture. Maybe 1, 2, 3, 4 years later, you might want to do one more venture where you might need the love and the affection of the community. And when that will happen? That will happen when every stakeholder, I didn't even say shareholder or token holder, I said every stakeholder looks at their association with you and says, you know what, this was really good. For example, your employees feel that you were fair with them, you shared your wealth with them, that they learned from you. Your investors feel that you lived up to their expectation and that you made a return. So what I'm trying to point out is that it is not just about what you can pull off. This is very important because fundraising, for better or worse, is indeed a sales process. It is pretty much not very different from selling anything else, because here what you're doing is you're selling your tokens or you're selling your equity or whatever. So it's a sales process. But what I'm trying to alert you to is to not get blinded by what can happen. And this is where point number one, a lot of people go wrong, because they will try to sell at the highest possible prices. By the way, nothing wrong with that. You should definitely try to sell at the highest possible reasonable price. But that word reasonable also come in. And there's a second dimension to this. The second dimension to this is what happens to somebody who buys shares from you or tokens from you. For example, when I sell shares in the stock market, frankly, if I sell for 110 rupees, it is not my business to figure out whether that becomes 100 or 120, right? It is that person's business. I don't know who that person is. But when you're trying to do a seed or private round, you probably know the person directly or indirectly. That's point number one. And point number two is that you also are in a situation where even if people are, let's say, buying from the market, where you may say, hey, then I don't know them. But you should know that unlike the stock market, unlike real estate, unlike Forex, unlike mutual funds, etc., where this effect is relatively much less, in the case of tokens, blockchain, cryptocurrency, frankly, it is all about community. If your community believes in you, they will stake their coins with you. If your community believes in you, they will not dump your coins first. They may have 10 coins. And let's say they want to sell something. You won't be first on their list. They will be last on their list. If your community believes in you, they will tell others when somebody asks them for a suggestion. So the only difference between a token, which is worth 1 million as market cap and 10 million and 100 million, and market cap and valuation mean the same. We tend to use the word valuation when we have to sell our tokens ourselves, and we tend to use the word market cap when something is already listed. But effectively, it means all of your total tokens multiplied by the price of the token. That is your market cap or the valuation. And same with share market, same with any other thing. In light of that, let us go back to the basics. Now, what I'm going to do is, since we are at around the midpoint of today's session, I'm going to start talking of the various factors and how to evaluate them. And this might be, if any one of you has been a good student and is the type that takes notes, you might have some points to write from here onwards. Rishabh, should I proceed with giving some points?
Yeah. So, just a question out of curiosity.
Sure.
It's a very well. I think the point that you mentioned is extremely helpful and to be emphasized on. So I just want to repeat it to everyone who is listening to this and is planning to start their own venture and make this idea from to a business. Do not think of fundraising as your last step or last objective, because it's just 1% of your entire business. There is a lot to it. And then a fundraising is just a beginning of a relationship with an investor. There is a lot to come. You would need that investor for your further rounds. You would need that investor to spread the word. You would need that investor to talk about your startup in the different sessions such as this. That way, he or she will be talking about your startup, your idea, and consider this as a beginning of a relationship and make valuation accordingly. Do not go and say, okay, this is the only chance I have. So let's take the maximum I can from their pockets. Yeah.
Yes. Okay. So what I will do is before I go into the various factors, I will actually add on to what you said. Look at it this way. Suppose somebody comes and I'm buying furniture, right? So I go to buy like a sofa and I'm at home, so I'm looking at things in my house. So table, chair, sofa, shelf, etc. And I want to sell this set for 1 lakh rupees. And somebody comes and says, you know what, I'll give you 80,000, right? Uh, well, before that person said it, I could actually have given the person a choice and said, you know what, you can buy it for 1 lakh rupees and I'll give you the full service. I'll give you delivery. I'll give you installation. I'll give you express delivery. Tomorrow it will be at your house. Or I can give it to you for 80,000 where you will do all of those things, right? Now, what this does is that it changes the focus from 80,000 or 1 lakh, but to the value that you're giving. So always try to change your discussion from valuation to value. Because if the discussion is valuation, frankly, it's very difficult to win. You can't win a valuation discussion. You can't win a valuation discussion. Just give me a second. Yeah, you can't win a valuation discussion. And the reason that you can't win a valuation discussion is that, somebody will always say, I want to give you less, right? And if you are powerful, you will win the debate. You will say, go away. I have better people. And if you are not powerful, you will have to give it to them at whatever valuation they're asking. I think that is very important. Focus on the value. So, for example, again, before I get into the factors which I wanted to, let us just say you are going to raise your tokens at a valuation of 5 million or 10 or 15 or 20 or 25 or 30. Realistically, most seed valuations are never more than this. Exceptions are of all types. Whether it is 1 million or 30 million, is that what the maximum market cap or valuation of your token is going to be? The answer is no, right? You should aspire for it to be 100 million. You should aspire for it to be $1 billion. I'll give you one interesting example. Around August of 2020, which means like say 13 months ago, I became advisor to Matic, which is today called Polygon. At that point, it was actually called Matic. And its market cap, which is valuation at that point was around, I'm using all round numbers, but its valuation was about $80 million. And today the valuation is about $10 billion, which is 125 times more. That means long after they sold their shares, they went to a high valuation and a low valuation. They were 80 million. And by the way, when I say I became an advisor, it is not as if because of me this happened. It never is. It's always because of the entrepreneur. And in crypto, it is because of the entrepreneur and the community. So what I'm trying to point out is that regardless of what it is today, since the total number of tokens you have are finite, like Bitcoin has 21 million tokens. Just by the way, you can have a model where it's not finite and you have elastic supply, like in the case of Ethereum. But still, even then, it is not literally infinite. I would encourage you to look forward to the day when you can sell your tokens for 100 million and 1 billion. Focus on taking your venture there. At the same time, I'm not lowering your valuation. And this is what is getting me to the various factors. What I would instead say is that suppose you can raise tokens at a valuation of 3 million also and 6 million also and 9 million also. Just see if the discussion can be that maybe if you're selling at 6 million or 3 million, which means a smaller number, maybe the lockup period can be longer. Maybe the vesting schedule can be longer, right? Maybe you can give other incentives to the person, because what will happen is there are 9 million at TGE, which is token generation event. You have to unlock a lot of shares or all shares or something like that. And at 3 million, you can put them on a 36-month vesting schedule. The fact is that if more of your tokens are locked, the market value is likely to be higher because the supply will be lower. And if demand is constant, you know the principle of microeconomics, the value goes up. At which point of time, your own tokens as the founder, as the team, as the treasury manager, as a corporate manager, or whatever it is that you're using your tokens for, maybe you're using your tokens for marketing services, staking, airdrops, or whatever, they will be worth more. So it could be that you could look at various parameters and not just valuation. All the same, let us look at the parameters of valuation. Rishabh, should we move to that part?
Yeah. But before that, we have a question from the audience. If you allow, can I take that? So this Leandro Camaco that says in 2020, more than 2 billion users already have installed in their smartphones a top messaging apps such as WhatsApp, Messenger, WeChat, etc. Do you think it would be attractive for the VCs the fact that we are building crypto chatbots in the top of this messaging app? So it's more about the business ecosystem, whether about the product market fit. So what would be your thoughts on crypto chatbots on the top
Okay,
of these messaging apps?
understood. So very simply, I will answer it in a way that this particular question is answered, as well as similar questions are answered, because somebody might ask chatbot, somebody might say algo programming, somebody might have portfolio management, somebody might ask for robo advisory, etc. So my question will answer all of them. Very simply, the simplest way to value for a VC or any investor, the simplest way to value a business is how much profit they will generate. Now, the problem is that profit will be generated at some point of time, which is an assumption. So we come back to today. Today, what are we talking about? Today, we are talking of community, but community is an abstract term. Just because 10,000 people retweeted something or tweeted something or put something on Insta, it could just be that you incentivize them by setting up some contest. So that also does not necessarily mean much. So the simplest parameter which works at all points of time is basically user base. If a company has a sufficiently large user base, whether they were, the user base was subscribers to a YouTube channel, whether it was people using a free messenger or the crypto add-on to that messenger or any other thing. It could just be a blog that everybody goes and reads, or it could be something like CoinGecko or Coin Market Cap where people go primarily to look at the price, the graphs, etc. Whatever it is, the moment you are able to aggregate a very large audience, it is worthwhile for the VC as well as all investors. Because, see, earlier it was all about revenue and profit. Then it became vanity metrics, such as how many downloads, etc. And this question is related to that also. But I think that what it is all getting down to, if you were to ask me today, from the investor's point of view, what do they want the most? Obviously, they want profits. But I'm saying that, okay, before that, how do they believe they'll make profits? It all gets down to attention. That app, that video, that website, that influencer, that social media, whatever, the difference between one great and the other not so great is the great one has more attention. So now a more direct answer to the question that you got. Technologically, the crypto chatbot kind of thing that you're saying, it could be the greatest, it could be the worst. For example, if you take messengers, like take WhatsApp, there is WhatsApp, the WeChat in the South Asian region, there is Hike, which supposedly has a lot of users, but I don't know any of them. Then there is Facebook Messenger. There's so many, right? Telegram is big in the crypto community, etc. Frankly, the messenger part of it is not very different. So why does one of them have so many more users than another one? Well, they did something to cause that, right? Their communication, their features, their ease of use, their community, their marketing, whatever it might be. So yes, I do believe, as a direct answer, that what you have suggested is an interesting proposition, but only if you can gain adoption. Like it was earlier this evening that I found somebody come up with a business plan for a token, which actually sounded like Bitcoin's business plan, as in literally Bitcoin. And I don't know how many of you know, but I have a golden retriever at home whose name is Bitcoin, who is actually sitting right next to me. And every time I say Bitcoin, he turns to me and asks, I mean, he's right there. If he comes close to me, I'll put him on the camera also. So he's wondering why I'm calling his name out again and again. But what I was saying is, I told this person that this business plan basically says that this will be currency. That does not make any sense. This is not DeFi. This token does absolutely nothing. You're basically saying, buy the token from me and use it to buy products. So you're saying this is, so he said, wait a second, the world's greatest token, which is Bitcoin, itself has the same business plan. So how can you say my business plan doesn't make sense? I said, the difference between you, and I'm not naming them because I never like to throw down entrepreneurs, the difference between you and them is that they have lots of adoption. They have lots of users. Lots of people have taken them on. Others like Ethereum or the now famous Cardano, etc., have created smart contracts. Bitcoin struggles with smart contracts. So theoretically, using other technologies, it can be done. But still, it is not as strong. Its transaction per second is the lowest, but it is still the guru. So, short answer, inherently, there is nothing bad with your plan. But unfortunately, inherently, there is nothing good with it either. If you can take this, create value and create a user base, it is actually a winner idea, given that there is so many messengers. Like yesterday, somebody who is in the psychiatry and mental health space, I was talking to that person, and instead of making an app, that person has decided to actually put a chatbot on top of WhatsApp using a business account and do that instead for the same logic that your questioner asked. I think great, but adoption, find a way. Don't think that you'll make something great and everybody will say, "Oh, now I want it." That is like somebody making good chocolate at home and saying, "You know what? Now Cadbury and Nestle and all will shut down because my chocolate is so good. It's not going to happen."
Great, great. That was so. He is saying thank you so much for the response. So yeah, let's move on to to the parameters that should be looked out
Yeah.
for.
So here is the thing. This is the parameter most people don't like, but unfortunately, it is indeed a parameter. One of the parameters that most people don't like is what is acceptable in the market. Very simple. Two startups, one in Silicon Valley and one in India, doing more or less the same thing of the same age with similar founders. Regrettably, one of them will get much more valuation than they fundraise in the other. Luckily, this is not true in the token world. In the traditional startup world, the Indian guy in India with Indian everything would have been able to demand a 1 million valuation, while the Silicon Valley guy would probably be raising at a 6 million valuation. Regrettable, deplorable, unacceptable, unforgivable. Lots of ables, right? But luckily in the crypto world, the Indians or any geographic restrictions are not really coming up too much. So if you're an Indian from India, you could demand a similar valuation to anywhere else in the world. So first and foremost, what seems like the range that people raise money in? So if you're a seed stage startup with very little done other than putting together a team and an idea, and my belief, based on what I heard from Rishabh when he introduced TDeFi, is that most of you are ahead of that. But if you're put together a team and an idea, not team is necessary, team and an idea. Today, such token startups are valuing themselves anywhere from 3 to 10 million. Right? Again, based on what? No, I'm not getting into that. I'm saying market numbers. If you have done more than this, that means you have an MVP. Wow, good. Okay, one thing less than that. You don't have MVP, but you have a working prototype. Great. So if you can do a little more than what I just described, your screens are in place, your workflow are in place, some partnerships are in place, some product is working, you can show them something, then the 3 to 10 range moves to probably 8 to 20, 8 to 15. Again, it can be very different. What I'm trying to do is statistically tell you usually where these land up. And if you've done much more than this, or in one of the things you've done, such as who is your teammate, etc., something gold plated exists, right? Then looking at numbers, say $30 million, that means your team is in place and somebody in the team was very, very strong. Okay, as in somebody stellar, rock star, and the idea seems like winning, and the partnership is in place, and the product seems to be in place. Maybe the UI is not fully done, etc., etc. Some amount of adoption or at least testnet adoption is happening. Then numbers can go somewhere between 15 to 30 million. Now, this is completely arbitrary because DeFi, NFT, chatbot on top. As in, what am I talking about? Right? Obviously, all of those have different numbers. But the fact is that at least I've given you some benchmarks as starting points. Now, you could be 1/4 of this, or you could be 50% more than this. That means you'll have to go anywhere, divide by 4 or multiply by 1.25. So that gives you your range. Now, what would those factors be? So after having established market benchmarks, we come to this. First and foremost, the condition of the market. So for example, right now, and some of the people who watch a recording of this will be watching in different market conditions, but right now the market is quite positive, right? It is not as frothy as it was in March and early April of 2021, but it's definitely quite optimistic. In light of that, probably the overall valuation numbers start pushing up a little bit, right? In bad market, or rather not so frothy markets, the valuation number comes down. In bad markets, you may not be able to sell your tokens at all, right? So market conditions. So first was industry benchmarks, second was market conditions. But both of these, if you think about it, have nothing to do with your project. So we come to your project. First and foremost, I think that if the team has, by team, I don't mean the founding team, I mean the founders. Because there's founders, then there is founding team, then there is, of course, the other people you hire. So right now I'm talking of founders. If there is at least two founders, and there's at least one tech founder and at least one business founder, right? This is already a complete team. Of course, I would want more than that. I would want a finance guy, I would want a product guy, I would want a sales guy, I would want a digital media guy. There's no end to how greedy I can become to make the perfect team. But if I can get a business guy and a technology guy, and technology guy here, I don't mean product, I mean engineering, which means somebody who understands code, etc. I think it's a complete team. And if they have something in their background, in terms of work experience, that shows that the business guy is able to grow user base, get into partnerships, manage digital. By digital, I mean digital media. And the engineering guy has produced things in the past. There have been products. So that means complete team with experience. That is one thumbs up. We will try to do more than two thumbs up. Okay, that's one thumbs up. The second thumbs up comes in the area that you're choosing. So for example, suppose you were to create a business where you're doing yet another yield farming destination, or yet another launch pad, or yet another NFT marketplace, which there are many of already, and none of them are doing like really great. Actually, some of them may be, but many of them are not doing really great. So this becomes a little bit of a thumbs down that, oh, is that what you're doing? I'm already invested in 4 of them, right? But at the same time, whether you are doing something extraordinary or you're doing something ordinary, but extraordinarily, that becomes a thumbs up. Very simply, do you know what a pedometer is? A pedometer is a little device you, let's say, attach to your belt or put in your pocket or carry in your hand, which measures how many steps you take. Pedometers are a dime a dozen, and in Indian rupee terms cost like around 200 rupees. But then along comes Fitbit and Mi Band and some other bands which cost thousands, sometimes more than 10,000, which are like a pedometer but probably have added a software layer on top. They have probably got a heart rate monitor. They've done a little bit extraordinary, at the heart of which they may just be counting your steps, and most people might be using it to count your steps only. But they have a differentiator or a secret sauce. I think that presence of such a differentiator or secret sauce, which people believe will have two characteristics. A, they will believe that people want it, and B, that you can pull it off. Because I can come up with, let me make a car which suddenly starts flying when I want it to. Oh, great. Everything is perfect with it, but I don't believe you can do it. So on the one hand, it should be something that people want. On the other hand, it should be something I believe you can get. So that is the differentiator. If you can get the differentiator, great. One more, community. See, even if you have nothing in place, you just have an idea, you just have a name, you could still start building a community. You could still start engaging with the community. You could get feedback from them. You could solicit ideas. You could do competitions. You could start talking to them on Telegram. You could start announcing programs. Basically, you can start building community. Crypto, see, everything, whether it is startups in general, whether it's Zomato versus Swiggy, whether it is digital wallet, whether it's whatever, everything is about community and user base now. But crypto, all the more so, being purely digital products where everything exists digitally, community is God. So any evidence you can show that you can create a good community, which means you already have a vibrant Telegram group or Twitter or Discord or whatever it is you're doing, maybe all of them, maybe you can engage, maybe you have some ambassadors, people who are your well-wishers, and this is going well. Quality as well as quantity. See, quantity is very easy. You could just have a bot which goes and adds 1 million people to your Telegram group, all of who will be then leaving very, very fast and complaining to Telegram that you did that. But just getting a 10, 20, 30,000 Telegram group is nothing. As in, for example, when I look at all the groups I'm in, I seem to be in some Ludo group. Ludo is that game. I never signed up for any Ludo group in my whole life. Then I realized, my settings were such that people can just forcibly add me. Probably that's why somebody added me. But what I'm saying is a quality and quantity of community, yet another thumbs up. So the team, its completion, its experience, the sector that you are in, whether there's a differentiator, whether it's believable, whether it's something that people want, whether it's a community. If suppose you have thumbs up in all of these, right? And thumbs up that other people believe, not what you believe, because your mom loves you more than she loves anybody else. But will your investor love you more than they love anybody else is the question. If you have a thumbs up on all of these factors, then the ranges that I have been giving you, 3 million to 10 million, 6 million to 15 million, and those kind of things, you can be at the upper end of those range, right? And if you feel that you have some thumbs downs, then depending on how many thumbs downs you have, you will have to make one of two compromises. You can still try to be at the upper end of the range, but have to struggle far more to raise money, hire agents, brokers, etc., and still not be sure because you want the higher valuation. Or you can lower your valuation so that it becomes easier for people to buy. So this was about the various factors. There is some tokenomics related issues also, Rishabh, that I would like to talk about. But since we are roughly around 15 minutes from the end of this session, I thought I'll stop and let you come in, and then I'll talk about the tokenomics.
Yeah, so we have, I mean, the parameters that you mentioned, we would definitely, put them together in a blog as well for all of these our attendees to actually read it because they were really insightful. I was able to relate, being a part of a lot of fundraising process for the startups that are incubated in TDeFi. I've been on these investor calls, understanding, their proposition, and these are the questions that come up. If you have a good team, community, differentiator, market sector, and then the market conditions. So, I mean, all in all, you just have to have a checklist and just tick mark whether you have 1, 2, 3, 4, 5, and then finally, if you have a tick mark in all of them, then you're in the upper range of the valuation. Otherwise, try to be in the middle range and have a reasonable valuation. So I think that was a fantastic answer, sir. I'll allow Shashank had raised his hand. Shashank, are you there? Uh, Ashar, if we have the candidate who has raised his hands to talk, please allow him. Otherwise, we'll continue. Meanwhile, we'll continue. So yes, I mean, token economics does again forms a very important part. The demand and supply is managed, is how well we are a project entrepreneur is able to manage the demand and supply of the tokens depends on how well the token economics is structured. That's what I understand, and I would invite you to speak about token economics.
So here is the thing, whenever somebody, so one thing that I don't know if your viewers know is that my full-time profession now is advising crypto startups, right? So the reason I share that information is to tell you that you can easily believe that I come across somewhere between 25 to 75 crypto startups per month, because that is the high velocity that is coming in now. And this is the people who interact with me. I end up advising probably like an additional 2 or 3 per month. So obviously I have to be selective with my time. Now, here is the interesting thing. When some of them who have already prepared their token economics and they come to me, I notice that usually they are one of two extremes. The first extreme, and by the way, token economics or tokenomics is a very vast area. I don't want to filter it down to the unlocking schedule or the vesting schedule. But right now I'm talking of the unlocking or vesting schedule. And what I find is that some token projects are very generous. They will say, okay, 10, 20, 25% of unlocking on TGE, which is a token generation event. And then in 5, 6, 7, 8, 9, 10 months, the whole thing is given away. Some of them are extremely stingy and probably to the seed round will give 0, no unlocking on TGE, and private round, they might say 5% or something. And then they will give you a cliff period. That means after that initial unlocking, for 1, 2, 3 months, there'll be no more unlockings. And then they will like give you a slow drip extending to well over a year. And I have tried to make a correlation between these two, the more liberal unlocking and the very stringent unlocking kind of people, and try to see how dare they, in both cases, how dare they demand about to daring it. But what I find is that there is no doubt that investors, wrongly so, as in when by the way, I do counseling session for investors also. Wrongly so, investors assume that more they get at TGE, the better it is. Because I tell them, listen, if you are getting more at TGE, but nobody else was, then it is good for you. I agree. But please remember, when you are getting more at TGE, others are also getting more at TGE, they'll all dump and the price will fall. And the price falls very badly. The market making or other mechanisms put in by the founder, if they're not strong, then basically it'll be very difficult for the token to recover. In fact, there are some founders who finally are saying, you know what, let my full vesting schedule get over in the next 12 months, then I will work hard. So that is nonsense. Obviously, it's a very negative approach. But what I'm trying to tell you is that valuation has a correlation with vesting schedule also. I found, the longer your vesting schedule, the greater the risk that the investor has. There's no doubt about it, because it's like, they will be able to sell their tokens at a later point of time. And if that is the case, then what we are going to see is a situation where people need to trust you more, or they need to trust you enough. Just as an example, take somebody who is having a total unlock schedule of 6 months versus 36 months. So these are like, usually it is always more than 6 months, and usually it is always less than 36 months, but I have used these extreme numbers to prove a point. And suppose I presented this opportunity to you. Don't you agree that with the 36 months one, I would want to look closer, I would be more worried, and probably invest only if I feel very strongly? What I'm saying is that people, token issuers, entrepreneurs such as you guys who are listening to this video, have in the past used the opportunity to actually make the unlocking schedule more liberal and thereby be able to ask for more valuation. Regrettably, that works. Why I say regrettably is because it helps sell the tokens initially, but later drowns the price of the tokens. Ideally, you come up with some sort of a sensible plan where you give very, very little, 5-10% at most, 0, 5 or 10% at the TGE, then put at least a 1 month cliff, if not more, and then consider a daily vesting. Daily vesting can be quite painful in terms of gas fees, but you don't have to really vest it into people's wallets. You can use some sort of a vesting app or a vesting smart contract where people can come and claim their tokens. It's getting to be quite common. And if you have kept a modestly liberal, like 5-10%, 0, 5-10% on TGE, probably to the seed you could give as much as 0, private could get 5 or 10, 1, 2 or 3 month cliff, followed by, let's say, a max of 10% per month, but on a daily vesting basis. I think that this is going to be probably the optimal valuation you can get. Not the most, not the least, right? So that would be one of the other factors that I have to list. So Rishabh, are you still there? Because I cannot see you, but we are now moving towards the very end of the session.
Yeah, I'm here.
Yeah,
I'm here.
If you could get Q&A from the audience, and actually one more chat message came up, which I could not read before it disappeared. But if you can just move to your questions or somebody else's question, we could end up opening with
that. Since the goal, okay, so again, for the question from the same guy, since the goal for this hackathon is to create new projects and ideas, which could be your best advice for us in this competition to get eventually a competitive valuation? For example, find mentors, partnership, or any others. Very, very nice question, I think, and that would be in most of the in the minds of most of the entrepreneurs. What should be they looking at? Being an early stage project like them, what should be they looking at? Should be they looking at find the right set of advisors, find the right set of partnerships, or what should be their focus on for at least in the initial days?
Very simple. First and foremost, as in before even the product, just see if you have the right team. If you don't have the right team, just focus on that, because that is the number one. Once you have the right team, you have at least one business guy in place and one tech guy in place, then you have taken care of the basics. You can keep getting the finance guy, the product guy, the social media guy, etc. Those could keep coming, but at least now the bare minimum is met. The second aspect would be the community. The moment you go out and tell your prospective investors that we already have a community, blah, 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 however it is that you complete the sentence, it is very, very, very impressive to everybody. Like, everything you say, your messaging gets amplified as an audience. I would say that is the second thing. Now, the question was, should we get best advisors? Should we get the best partnerships, etc.? Actually, these are not either or. For example, is it true that getting good advisors or partnerships in place will help you build community? The answer is yes. So then which comes first? Which causes what? Actually, even the reverse is true. If you have a strong community and you approach advisors, for example, I told you that I have approached between 25 and 75 token startups per month, and I sign on, let's say 2 or 3, right? So what is my parameter? How do I choose how to be an advisor to somebody? Very simply, I use the same factors that advisors use. One of them is, have they already been able to build some sort of a community? Right? So in light of that, I would say after team comes community, but for the purpose of community, your UI, your branding, your advisors and your partnerships may play a factor. So all of those are A leads to B, leads to C, leads to D, leads to E, leads to A. So that means then you focus on this entire thing, which means loosely we could put this all into the bucket of ecosystem. Advisor is part of ecosystem, so is partnership. So is how you are treating the ecosystem, which is your community and number and quality and quantity of them. And then of course your messaging, which is your content, your Medium blog, if you have it, your Discord, your events, your memes, your whatever. So I think that all of those are like a wheel. all lead to the other. I think that since you are at this stage, this is part of a hackathon, that would probably be what I focus on.
I think just to add just a point here, I mean, to have a beginning, probably having good set of advisors will help you bring the right partnerships. Maybe if you, because an advisor is a well-connected person in the ecosystem, and they would help you to build the right partnership, find the right target for you if you want to acquire a startup, or let's say if you would like to be acquired by someone, or maybe find the right partnership. So I think to start with, look out for people who would contribute to build, to help you in reaching your goal and fulfilling your vision. We have another question in our YouTube, which says, which is the best and preferred location to launch a blockchain startup? So I think this is more on the legal side and the regulation side. But if you would like to answer, I mean, you can
No,
deny to
I
as
will
well,
answer.
but yeah.
I will answer, but with the disclaimer that I'm not a lawyer, I'm not an accountant. So let us just quickly see, what do people look for? One, they look for a territory which does not seem to at least have a problem with tokens and blockchain. Second thing is a territory which investors are willing to put money in. For example, Binance. Now, Binance has many companies around the world today, but the main Binance was set up in Seychelles. Seychelles is completely okay with the token. And in many parts of the world, Seychelles is the preferred destination. However, if you were an American company, I see that most of them want to incorporate in Cayman Islands. If you look at India and this region, which is Southeast Asia, it has become very popular for people to incorporate company in BVI, which is British Virgin Islands, etc. Now, there are lots of pros and cons. There are lots of rules that you may actually accidentally be breaking in setting up something like this. So that is why you need legal advisors. And one of the things that I do is, when I become an advisor, I immediately ask them, do you have a lawyer on board? And if they don't, then I connect them to people and say, please have somebody who's going to give you legal advice, because the world of crypto and blockchain has definitely strong regulatory and legal implications, which one should be completely clean on.
Right, right. So thank you so much for sharing those insights. I think we are quite close to to the end of the session. To have your closing thoughts, I would like to know from you, how do you see such events like this, like a business hackathon, which is an opportunity to come in as an idea and work out as a business. How do you see as this as a helpful platform for an early stage startup or an
I think
idea?
that, so very simply, I'll just give you like a 30-second background in this. I used to be the CEO of IIT Bombay's business incubator. Now, there, the program duration was much longer than probably what you do. But in principle, it was that come in with some sort of team idea, etc. We'll help you build it, and you will leave as a successful or viable business. I have done similar things elsewhere also. So I'm completely convinced that this is a great idea in principle. Those of you, so my first name is spelled as Ajit, which probably you know from the program itself. Why I'm telling you this is that look me up on LinkedIn and specifically go to articles that I have written. So I've written a lot. Coincidentally, I'm the author of 8 books. But my most famous writing has been an article I published on LinkedIn, which was called Incubators, Accelerators, and Mentors Are Epic Fail. So that actually turned out to be my first most famous article. And while I began by talking about why these ideas, though great in principle, fail, I've also given suggestions as to how to make them succeed. So very simply, just like entrepreneurial startups, even such programs as this one could be the greatest thing. They can become the next Google and the next Facebook and the next Zomato and the next Paytm, or they could end up not creating value. It depends on the execution. So great in principle, great outcomes are possible, but all the people have to be dedicated and passionate about it. With this particular program that I am now talking in TDeFi, I found that they were indeed very passionate about what they were doing. And that is what prompted me to come and speak here today.
Thank you so much for those appreciating words. And I think, I mean, I completely, agree when you say that it's be it any business, be it an accelerator or a project, be it in the crypto space and non-crypto space, if there is sincerity and persistence in the efforts, I'm sure everything is bound to succeed. It's as simple as that. With this, I think we come to the end of the discussion and the session. We have a lot of questions, but I'll probably drop an email to you and with all these answer questions. And whenever you have some availability, please feel free to answer them so that we can share. But it was a great session, sir. We all loved it. In fact, I personally had some great insights from that. And a lot of our audience have also got a huge insights. There are a lot of thank yous coming in the YouTube chats and the Zoom chats personally to the host. So thank you so much, everyone. We look forward to the next session, and you would get the recording or the live video of this on YouTube just after the session gets over. If you have any other questions, please feel free to drop an email to us. And if they want to reach out to you, which would be the best platform?
So my most native social media is actually Twitter, but probably given the nature that this is a professional discussion, they could consider doing LinkedIn also. Twitter I check 2 times a day. LinkedIn I check once every 2 days, so it's good enough.
Thank you. And we'll share your handles with all of our participants.
Thank you very much. Thanks.
Thank you. Thank you so much, Mr. Ajit. It was a pleasure talking to you.
Likewise. Thank you very much.